In the summer of 2026, a company lost nearly $5 billion in just 1 year. A few hours later, Wall Street valued that company at more than $2 trillion, making it the largest IPO ever recorded in human history and completely shattering the previous record set by the oil giant Saudi Aramco. Sounds unbelievable, right? But that is exactly the story of SpaceX. On June 12th, 2026, SpaceX officially went public with an initial offering price of $135 per share. Thousands of investors flocked to Times Square to witness this historic moment. By the end of its first trading day, the stock had surged nearly 20%. SpaceX became one of the most valuable companies in the United States. Elon Musk also became the first trillionaire in history. But there is one detail that very few people talk about. Just 1 year earlier, SpaceX had reported a loss of nearly $5 billion. It was not because revenue had declined or because profits came in below expectations. It was a real loss. Billions of dollars had been poured into rocket test flights, ambitious AI projects, and a series of extremely costly investments. Normally, Wall Street does not like companies that burn cash so aggressively. They usually punish them. So why was SpaceX the exception? Why would a company losing billions of dollars every year be valued on the same level as Apple, Microsoft, or Alphabet? The answer may be completely different from what you think, because SpaceX today is no longer just a rocket company. Falcon 9 and Starship are merely the most visible parts of a massive business machine operating behind the scenes. In this video, we will break down the entire SpaceX empire to answer one simple question. What makes millions of investors willing to bet on a company that is losing billions of dollars every year? To find the real answer, we have to go back to a time when the company was on the verge of not surviving at all, and that is where things become truly astonishing. If you look at its early years, SpaceX resembled a continuous chain of failures, racing straight toward the edge of complete bankruptcy. In 2002, Elon Musk had just sold PayPal to eBay. After taxes, he walked away with approximately $180 million. At the time, Musk was only 31 years old and could easily have retired with enough wealth to last a lifetime. Instead, he decided to enter one of the most difficult industries on the planet, the rocket industry. This is a field where even giants such as Boeing, Lockheed Martin, and national space agencies with budgets of tens of billions of dollars regularly experience failure. The idea Musk proposed sounded very simple: build rockets at a cost far lower than the industry standard. But in the early 2000s, that idea was considered impossible. Rockets are not like software. You cannot launch a product and then patch the bugs later. A single minor error in the fuel system, engine, or flight controls can turn tens of millions of dollars into a fireball within seconds. And exactly as many predicted, SpaceX kept stumbling. On March 24, 2006, Falcon 1's first flight failed after only about 25 seconds due to a fuel leak that caused an engine fire. A year later, on March 21st, 2007, the second Falcon 1 launch was more successful, but it still failed to reach orbit because of fuel sloshing inside the propellant tank. On August 3, 2008, the third attempt ended in disappointment as well, when the first and second stages collided with each other immediately after stage separation. 3 launches, 3 failures, tens of millions of dollars vanished in an instant. More importantly, investor confidence was beginning to run dry. By the end of the summer of 2008, SpaceX had almost completely run out of cash. Elon Musk later revealed that the company had enough resources left for exactly one more launch. If that attempt failed, SpaceX would shut down forever. On September 28, 2008, Falcon 1 rolled out to the launch pad on Amalek Island in the Marshall Islands, marking a life or death vote for the entire company. At SpaceX headquarters in Hawthorne, California, many engineers had already prepared their resumes. Some were ready to start looking for new jobs within the next few days.
7, 6, 5, 4, 3.
Then, something no one could be certain of happened almost miraculously. Falcon 1 successfully reached orbit. For the first time in history, a liquid-fueled rocket developed entirely by a private company entered Earth orbit. That moment did not just save SpaceX, it changed the history of the commercial space industry. But unfortunately, just as SpaceX had escaped death, the world plunged into the worst financial crisis since the Great Depression. In September 2008, Lehman Brothers collapsed. Credit markets froze, investment funds stopped deploying capital, cash became the most valuable asset in the world. It was almost the worst possible time for a cash-burning startup like SpaceX.
In any society, there are going to be some people who lose their jobs and can't pay. But it was practice because the banks made a lot of money out of it.
However, just 3 months later, in December 2008, NASA awarded the company a commercial resupply services contract worth approximately $1.6 billion to carry out 12 cargo resupply missions to the International Space Station. It was a lifeline. The contract provided a steady stream of revenue, allowing SpaceX to survive and proving that a private company could handle missions that had previously been reserved exclusively for governments. From that point on, the game changed. SpaceX was no longer trying to survive. They began rebuilding the playing field itself. The biggest turning point came on December 21st, 2015. After delivering a satellite into orbit, the first stage of the Falcon 9 returned and successfully completed a vertical landing at Cape Canaveral. It was a revolutionary moment for the aerospace industry. Imagine if, after every flight, American Airlines or Delta had been forced to throw an entire Boeing 737 into the ocean for more than half a century. This time, Elon Musk had accomplished something extraordinary. SpaceX became the first company to transform rockets from single-use products into vehicles that could be reused multiple times. As a result, launch costs dropped dramatically. Launch frequency surged. It officially marked the technological gap between SpaceX and the rest of the world. By 2025, SpaceX was carrying out more than half of all orbital launches worldwide and transporting approximately 83% of the total cargo mass sent into space. In other words, from a startup that had enough money left for only one final launch in 2008, SpaceX had become the dominant force in the global space industry in less than 2 decades. At this point, it might seem like everything could have ended happily, right? But we were wrong. Did you know that, as of today, SpaceX is still burning billions of dollars every year? The answer, it turns out, is not on the rocket launch pad. It is sitting on the rooftops of millions of households around the world. There is a particularly fascinating detail in the SpaceX story. The thing generating most of SpaceX's cash flow today is not the Falcon 9, not the Dragon spacecraft, and not even its multi-billion-dollar contracts with NASA. Can you guess what it is? It is Starlink, an internet service. It sounds hard to believe, but imagine living in rural Montana where your nearest neighbor is miles away, or working on an offshore oil rig in the Gulf of Mexico, or being a fisherman in the waters off Alaska. In places like these, laying fiber optic cable is often prohibitively expensive or nearly impossible. For years, people in these areas had to put up with painfully slow internet speeds or no connection at all. But with Starlink, all they need is a receiver about the size of a pizza box mounted on their roof. That dish connects directly to thousands of satellites orbiting Earth at an altitude of roughly 340 miles. As a result, they can stream Netflix, make Zoom video calls, or play online games at speeds comparable to those in many urban areas. That is the product that completely transformed SpaceX's business model. While the world focused on rocket launches, Starlink quietly built something Wall Street absolutely loves: recurring subscription revenue. Unlike the rocket launch industry, where revenue only appears when a customer books a launch, internet service generates a steady stream of cash every month, much like Netflix or Spotify. The difference is that Starlink does not deliver movies or music. It delivers internet from space, and its scale of growth has been truly astonishing. In 2021, Starlink had only about 145,000 customers worldwide. By the end of 2023, that number had surpassed 2.3 million. In early 2025, subscriptions reached approximately 5 million, and by the first quarter of 2026, Starlink had exceeded 10 million users across more than 160 countries and territories. To serve that massive customer base, SpaceX has continuously expanded its satellite network. As of 2026, the company had launched more than 9,000 Starlink satellites into orbit. According to multiple industry estimates, approximately 70 to 75% of all active satellites currently operating in low Earth orbit are owned by SpaceX. That is an almost unimaginable figure. While most companies are trying to compete in the satellite internet market, SpaceX is shaping the entire market itself. And this is the part that truly excites investors. Starlink is not just growing rapidly, it is also generating profits on a very large scale. According to figures disclosed in SpaceX's hypothetical IPO filing, Starlink's revenue grew from approximately $200 million in 2021 to more than $11 billion in 2025. More importantly, the business generated more than $4.4 billion in operating profit and roughly $7 billion in EBITDA during 2025. But SpaceX's greatest advantage lies elsewhere. The company controls virtually the entire value chain, from satellite design and manufacturing to rocket production and launching those satellites into orbit. It then sells services directly to end customers. While competitors such as OneWeb and Amazon Kuiper must spend hundreds of millions of dollars on launch services, SpaceX uses its own Falcon 9 rocket fleet. In other words, what is typically the most expensive cost in the satellite industry becomes an internal cost for SpaceX. This is a classic example of a vertical integration strategy that very few companies in the world can replicate. At this point, the picture starts to become much clearer. SpaceX is not just a rocket company. It owns one of the fastest growing subscriber networks in the world, with millions of customers paying every month. But if Starlink is generating billions of dollars each year, and SpaceX has the ability to manufacture and consume internally, where is all that money going? This is where the story becomes truly fascinating. Because Starlink does not keep most of the money it generates. It is funding another SpaceX project, one that Elon Musk believes could take humanity to Mars, Starship. Over the past several years, SpaceX has poured tens of billions of dollars into this project. Massive factories have risen along the Texas coast. Thousands of engineers work around the clock. Prototypes are constantly being built and continuously tested, and sometimes they explode, turning tens of billions of dollars into ashes. For a typical public company, that would be a nightmare. Imagine a business reporting steady profits from its core operations, then using most of that money to fund a project with no clear timeline for generating revenue. What is strange is that instead of running away, investors have continued pouring money into SpaceX. They have even pushed its valuation to more than $2 trillion. Why? Are investors seeing something that the rest of us have not yet recognized? That is when the biggest debate began to erupt. The brightest minds from all over started focusing on a single question: is Starlink large enough to finance Elon Musk's dream? And from that point on, Wall Street was immediately split into two camps. The optimistic camp believes the answer is yes. Skeptics argue that the answer is no. One side sees a global internet network with tens of millions of subscribers in the future. The other sees only a rocket project with a far-fetched dream, still burning billions of dollars every year. One side sees Amazon in its early days. The other sees WeWork. What is interesting is that if you look closely, you will realize that Wall Street is not actually valuing SpaceX based on its current revenue. They are valuing something else, and that is the real reason a market capitalization of $2.1 trillion emerged. This is probably the most important part of the entire story, because if you ask an average person, what does SpaceX sell, they will answer, rockets. If you ask an investor who has poured millions of dollars into this IPO, what exactly did you just buy? The answer is usually very different. What they are investing in is not Falcon 9, Dragon, or even the highly promising Starship. What they are buying is ownership in an ecosystem that, as of today, has no rival. Now step into Wall Street's shoes, the apex predator of the financial food chain, and look at SpaceX through an entirely different lens. First comes Starlink. What makes it valuable is not satellite internet itself, but the fact that it is a global subscription business. Every month, millions of customers send money into the system. Every year, that number continues to grow rapidly. That is the foundation of cash flow. But if Starlink were all SpaceX had, the company would never be valued at $2 trillion. What drives that enormous valuation lies in its growth options. In the investment world, people are sometimes willing to pay a great deal of money for things with future potential. Not because they are certain to happen, but because if they do happen, the payoff will be enormous. It is a bet, and Starship is the perfect example. At the moment, Starship is still consuming billions of dollars and has yet to generate significant revenue. But if SpaceX succeeds in turning Starship into a fully reusable space transportation system, the market the company is entering will be transformed completely. That is why many investors do not view Starship as an expense. They see it as an investment with the potential to create immense value in the future. A ticket to bet on a market that does not yet exist. Sounds pretty crazy, right? Then again, billionaires are rarely ordinary people. As analysts dig deeper into the research reports produced by major investment funds, another fascinating pattern emerges. Many of them do not see SpaceX as a rocket company. They see it as an infrastructure company. Its true value lies in its satellite network, its customer network, its data network, and its space transportation network. Once a network becomes large enough, its competitive advantage becomes increasingly difficult to challenge. That is why Amazon is not valued as a bookstore, Google is not valued as a search engine, and SpaceX is not valued as a rocket company. Investors are valuing the position each company could occupy in the future. On paper, this is a company that has just gone public with a valuation of more than $2 trillion US. Yet it is still reporting losses of billions of dollars every year. A company whose current value is built not on profits, but on the belief that it will dominate industries that do not truly exist yet. However, the reality is very simple and also very harsh. If Starship continues to experience failures, if AI costs keep ballooning, if Starlink's growth slows down, or if shareholders begin selling after the lockup period expires, the market will change as well. Wall Street is famous for its lack of patience. They do not pay for promises, they pay for results. On the other hand, Starlink is now the largest satellite internet network in the world, with millions of subscribers paying every month. SpaceX conducts more orbital launches than any country or company on the planet. For several consecutive years, more than half of all satellites placed into orbit worldwide have been launched by its rockets. So the biggest question is not how much money SpaceX is losing. What investors truly care about is whether the money being burned today is building the most powerful company of the 21st century, or are we witnessing one of the boldest speculative bubbles in the history of the capital markets? What about you? If you had $100,000 US to invest today, would you be willing to bet on SpaceX at a valuation of more than $2 trillion? Leave your thoughts in the comments below, and don't forget to like and share so you won't miss any exciting videos. Bye, guys.